Hi guys, welcome to episode 3 of my weekly trade recap series. So this is a series where I basically take you through the trades that I've taken for the past week. You can see sort of my thought process behind each different trade, my strategy, and sort of how I like to mark out my charts and sort of get my bias for each individual trade. So yeah, this week was a positive week. Ended up the week on plus 3R, which is great. Had no losing trades, which is really awesome. So in terms of capital preservation, very nice week. There was no drawdown involved, which is really awesome. And yeah, I think I took 5 trades this week, one being a win and the rest being break even, which is really awesome. I think I did get very close to 2 wins, which you'll see later on in the video, which is a little bit frustrating, but that's just part of the game of trading. I think the trade ended up being 2.5R. I usually target 1 to 3, so it became very close, but it is what it is. I'm not going to complain about it at all. Like I said in my previous video, break evens, I see them as a win. You can't really go wrong with them. Kind of keeps you in the game for longer instead of taking lots of losses and things. So yeah, with that being said, we can hop into the first trade here. So the first trade I took Tuesday the 25th of November. This was on YM or US 30. So coming into the session, overall, like the past few weeks or few days, sorry, we've been very bearish, but we kind of came into this area here where we can definitely see that price has changed its tune a little bit, and we started going sideways quite a lot. And after this, strong push downwards, we've come sideways. We're probably going to take some sort of highs that we've created here on the way down. So actually, on this day, I did think, given the price that happened at the start of the New York session, this high here was likely to be taken. So yeah, if we drop down to the 15-minute, I focus on inverse fair value gaps and trading momentum. So I like to have a few different things sorted out before I enter my trade. So usually on the 15-minute, before I drop down lower, I do like to see all the 50, the 20 and the 10 EMAs sloping upwards, and a strong reaction from price from those EMAs. And that sort of tells me that on this day, in this time period here, there's a lot of momentum in price, and likelihood is that we're probably going to continue higher to take this high here that I noted beforehand, especially given this sort of consolidation period that we had here. So another thing as well that led me to believe that was the way we paused right here. Why did we pause just beneath this high, given that we'd had this momentum beforehand? My bias was I think that price was setting up here to get a big push further through this high, and so that is what ended up happening with the trade. So if we play a few more candles here, price does play around for a bit, but you can see we're coming up here. We don't really get a push lower. We did take out the low of this 15-minute as well, which is really awesome to see. We also, on the 5-minute, you can see us here building up, price coming up higher. Again, we had this high here in correlation with this high that was kind of looking to target. And on the 1-minute, if we drop down lower, if we play price out, we did create this fair value gap right here. And so if we pop that there like so, we're just looking to inverse this fair value gap. Now, usually on the 1-minute, I do not like price touching the 50. If price touches the 50 and the EMAs are quite bunched up, that does tell me that momentum is being lost in price. However, we did have this push up here, took out these intermediary highs, and we kept taking out these highs. And given that this high here, again, paused just before this high, I was thinking if we get a strong move up here, likelihood is we're definitely going to take this high, then take that high, and take the high from before. So that was kind of my thought process going into this trade. And if we play this, very strong move here, big displacement through this inverse fair value gap, and then I'm looking to break even at this high just here. Now, the reason I break even at this high here is because given at this point in the market, I can say with pretty high certainty that this high is definitely going to be targeted after this candle. It's very rare that we have an extremely big push upwards close to a high in a bullish market where that high doesn't get taken, unless we're really overextended higher up in price. But given that price have bunched up a lot here, we are generally bullish, and we made a really strong move up, again pausing the high of this candle just beneath this high. my assumption is this high will be taken, and hence this is why this is my break-even point, because oftentimes I can say a pretty high certainty that this area here will get taken, and therefore it's a good spot to break even in these types of trades. So yeah, break even at that high there. And so now we did take this high, paused again right before this other high, creating equal highs. I think price played around here, and then yeah, the rest was history. It just ended up flying up. So I do target only 1 to 3s in these scenarios. I could mess around in my data to see if I can target higher, but for now 1 to 3 kind of works nicely for me. The strategy is very profitable, just targeting 1 to 3. So yeah, that was the first trade of the week on US 30. Very nice way to start things off. Okay, so moving on to trade number 2. This was on Wednesday the 26th. So this was on ES. Now, just looking at this market here, we can see that we're clearly very bullish on the 1 hour. We had these, pushes down lower over the past few weeks, but you can clearly see there is a change in price, whether it be for the long term and we keep pushing higher or not. We definitely see that right now, price is bullish. We have the EMA sloping upwards. We've had, pushes upwards from the EMAs is exactly what I want to see, show me that price definitely probably has room to move higher. So before the session starts, we drop down to the 1 minute. So on here as well, we can see that we've taken these lows. So price has basically shown us here that it's reaccumulated, ready for potential leg higher. Like I said in my previous videos, I kind of like to trade price in sort of these moments right here. I like to look for momentous markets, markets showing a lot of momentum. When price reaccumulates, that's kind of when we look to move. That's when we look to take advantage of the markets. Now, this kind of idea here is fractal as well. So this happens on the daily time frame, the 4-hour time frame, the hour time frame, the 15-minute time frame, the 1 minute time frame, whatever time frame. The idea of how price creates big legs either up or down, and then either reaccumulates or distributes and then moves higher again or lower again. That happens all the time on every single time frame. So this is just an example of that on the 15-minute where price has had a big move higher. We sort of had this sort of reaccumulation or whatever it is, and then as prices come up, I'm kind of thinking that price is going to do something like so. That's kind of my idea, and I'm wanting to look to get involved in these big legs. So yeah, now if we play price further onwards, we do get a move higher, I believe, on market open. Yeah, so market open happens and we do get a really, really big move. So away from the EMAs as well, we've had a push above and then it's come back down and a big push up. So we can look lower on the 15-minute. Now that candle hadn't formed just yet, but given that we created this fair value gap, and like I said before, if we get we're already in a bullish market, okay? And if we get a push higher up, close to these highs, likelihood is at least this high will get taken, okay? And it doesn't matter what price does after that, we're break even, and so it's a risk-free trade, which is really awesome. If price wants to carry on going and create those legs that I thought would be made, then perfect. Equally, price can either chop around or come straight back down. I don't care, I'm break even, it's none of my concern. So if we play price out, there we go. We get a really nice displacement through this fair value gap right here. So you can see price had come up, come back down, filled this imbalance that was created by this candle here, and boom, comes straight through above the fair value gap. So I'm thinking here, great likelihood this high is going to get taken, and it doesn't matter what happens next, but we can keep going. So boom. Straight away on this candle here, we actually do move break even. Price does continue to go a little bit higher, and then we come back down. Now, as I wasn't even upset at this point, because sort of as these candles are being put in here, this is really weak movement higher, and I did think to myself, we're probably going to get a big move down, because if you've got lots of these little candles making higher highs, higher lows, but they're not really making too much of an advancement in the market, they're not very strong candles. They're very weak. Like, look at these candles here compared to these candles here. If these candles here were being made up here, price would have probably exploded, and we would have maybe reaccumulated here and then carried on higher. But right this time here, I was very happy that I was break even, because yeah, I could have made a little bit more money if I'd sold here, but how would I have known to sell there for this example? And also, like I said, very weak candles, I was ready for this to sort of happen. So yeah, that was trade number 2 for the week on ES. Very good trade, happy with it. A nice break even. Okay, so moving on to trade number 3 for the week. This was also on Wednesday the 26th, but it was back on US 30. So we had a previous win on US 30 the day before. I was back looking to trade this asset again the next day. But just looking at it now, we can clearly see, like I mentioned before, a lot of my entries look very, very similar. Okay, you want to be looking for, this is how you should be treating your entries. If you're taking trades and every time you look back at the screenshots and they all look different, you're doing something wrong. That you need to have a system in place that every trade is going to look very, very similar. You need to have a list of rules in place that you follow, and if you don't have that, then in my opinion, you're not going to go very far in this game. So here in this trade here, we're looking at the hourly time frame. We've had these breaks above this high here. We've had a little reaccumulation, very weak reaccumulation into the EMAs here, and we've had big pushes higher. Clearly a lot of momentum in this market, looking to ride the wave higher. So going down to the 15-minute, this is that reaccumulation we had on the 1 hour. We've come down beneath the 50, but it's been bought up straight away, and we've pushed back above it, come back down into the 10 and 20 EMAs here, and a big push higher. Again, had this big push higher, sold lower, and then we've been bought up again at the EMAs with good strength. So this is really awesome. This is great to see. This is a really strong market that is most likely going to continue higher. So if we press play on the candles, and then we go down to the 1 minute. So looking here, if we see, okay, so this trade here was a little bit harder to actually notice, but we had a fair value gap right here. Now, price did actually try and climb above this fair value gap previously, right here, but obviously failed. Price respected it and came lower. Now, in these scenarios here, usually I like these. If this high here gets taken, then with good displacement, then I can look to follow the trade. If this high gets taken and it gets wicked above, I will not take the trade, even if the fair value gap has been inversed, but there's a wick above this high. I will not take the trade. I will wait for a close above that high to then look to enter. So if we press play on this trade, there we go. So we get a nice big push here. Again, like I said before, we're already in a bullish market. You could argue this is slightly overextended. I did think that we had one more push here. If this was up here, I wouldn't have taken this trade. I would have just thought it's way too overextended. But I think if you look on the 5 minute, also we had a very, very nice candle being put in where we've taken 2 lows there, here and there. So that's evidence of some sort of reaccumulation on a lower time frame. Looks very bullish to me. The fact that we put this candle in here, likelihood is, you can see it on this chart, but that high is most likely going to get taken. So if we move lower again to the 1 minute, we press play, boom, we get a nice push above the high. Price does play around and we have a break-even trade. Now I think in this scenario, price does continue to climb. Yep. So it's just one of those trades where we kind of got the idea correct, but we just got taken out of break even, which is completely fine. It's part of the strategy. I know for myself that my break even rate is quite high, but it saves us having some losses here in this scenario. We could have had a win, but I think it's the wrong way to look at things because there's plenty of other scenarios where I break even and it would have been a loss. So yeah, not too bad. Very happy with this trade. Good execution, good market conditions. Overall, happy. Okay, moving on to trade number 4 for the week, which again was on Wednesday. So Wednesday was a pretty active day for me. You can see here, again, if you look at the starting market conditions, we always start on the 1 hour, most of the time anyway. You can see that price is very bullish. We've had pushes higher over all the EMAs. We've reaccumulated into the EMAs and we've had strong pushes away from them. Big bullish candles. A lot of momentum are held in these candles. Money has come in and showing us that we do want to go higher. So again, like I said to you before, a lot of my trades, when you start to look at them, look very, very, very similar. And that is how you want to trade. Most of the time, I find myself not trading. I find myself sitting on my hands and waiting for these correct market conditions to come in, because trading is a waiting game. It's a game of patience. You know, you don't want to be trading any and every market. You simply want to wait for the correct market conditions to come in where you know your strategy works. And hence, this market condition came for me and I was happy to look for trades. Now, dropping down to the 15 minute, we had a nice reaccumulation here in the New York Open and pushes higher. Now, when we touch the 50 on the 15 minute and we push higher aggressively like this, I do either look for two things. I either look for price to come down into the EMAs, or I look for a candle low to be broken and evidence that price wants to move higher again. So in this scenario here, there probably was trades that happened in sort of this leg of price right here. However, for me, I've just found that sometimes this can sort of happen and then we get big moves lower. So we take these highs here and then we come lower. And so I like to look for a bit more evidence, a bit more confluence that price wants to continue higher. So that's just for me. There is an argument to look for moves in here, but for me personally, I don't do that. Now, we did have this high, or sorry, this low of this 15-minute candle taken, and we can see here that price looks pretty strong at this point. And so, and just given that the market in general, there is a lot of momentum in this market here. You know, we're coming up to these highs here eventually. Most likelihood is they will get taken, considering, you know, if we look at silver, especially over the past, you know, weeks, it's just very, very bullish. You know, it's a bullish market. These highs here are ultimately where, you know, the main sources of liquidity are in this market, and we're going to be shooting for those. So yeah, if we shoot back down to the 15 minute, like I said, looks very nice, very clean, happy to look lower. On the 1 minute, so price has sort of chopped around here for a while. This was that 15-minute low that I said we had taken. Price had, you know, failed to come even lower, and we've had this strong move here, which is great to see. So at this point here, we kind of assumed that this high was going to get taken, which it does. Yeah, nice big push higher. Now, this candle here was slightly ugly, I must admit. However, just considering the general market conditions, the way that silver have been performing recently, I just thought that this would be a good long position. So if we play the trade out, we have a inverse fair value gap right here, and I think price respects it, but then breaks through with relatively good displacement as well. You know, these candles here are pretty nice. You can see this candle here pushed up higher, left behind a lot of what's the word, a lot of displacement in price. You know, so this candle here filled up that imbalance, that was the word, filled the imbalance nicely, came straight back up, and then we climbed over this inverse fair value gap. This was a very nice setup for me. So continue to play price, and yes, we get a lovely push higher. This here was my break-even point, as we mentioned before. And so here I was sitting pretty in this trade. I thought, great, it's probably going to be a nice 1 to 3 trade. However, we do get tapped out, and then yeah, we end up having a break-even trade. Now, if we continue to price to play out, it does actually move higher, but again, just part of the game. Nice to know that I got the direction right for this, you know, particular scenario. And I think at this point as well, on some of the indices, yeah, there was a bit of a crash, like a flash crash that happened on Wednesday. It was literally the same time as this this silver trade here. That was these moves here lower. So I don't know if someone tweeted something or something like that. Some sort of news came out, unexpected news that sort of made this, you know, push down lower here. Maybe it would have continued higher, but doesn't matter. It's all hindsight, and like I said before, cannot be upset with the break-even trade. So this one's very nice. Follow my rules nicely. Happy with it. Okay, moving on to the 5th trade of the week. So I know I said there was 5 trades at the start. I think there's actually 6. So this was the second to last trade that I took. Again, starting off on the 1 hour, we can clearly see that price is very, very bullish. Everything is sloping upwards. We've had some nice moves up the previous days. Obviously, Asia has reaccumulated overnight. And again, we have these pushes away from the EMAs, which is really awesome to see. So again, like if you compare my trades side by side, most of the markets look very, very similar. So again, this is looking really good. So if we drop them down to the 15 minute, This was actually after the US bank holiday, so it was Thanksgiving, so happy Thanksgiving to anyone who is listening who lives in the US. Hope you had a good day. But yeah, so our market open here, we were just playing around at the EMAs, but then we had these big pushes higher and the EMAs begin to slope upwards quite heavily. Again, this is something that I look for and that I like to see before dropping lower. So if we do drop to the 1 minute, we've had these pushes higher here, and now we are quite high up, and yeah, just looking for this fair value gap here to be inversed, which I believe it is inversed. Yes, correct, it is. Now, this day in particular, I will admit, I think I suffered from slight impatience and overtrading. So you'll see in this example and the next example, yes, market conditions are good, but considering we're quite high up in this leg as it is, there was, US bank holiday the day before. There's probably a lack of liquidity in the market. The futures markets were shut. I even journaled myself that I was feeling slightly irritable this day for whatever reason, and I think I did suffer from overtrading. So not that the setup was bad, but looking at this displacement here, I would have liked to see, looking back at it, a higher, like a more, this wick on this candle, not my best setup. Did fit my rules though, so I did take it, and it ended up being, break even. This is the break even point. I think if we actually play this out, price did actually end up moving a little bit higher. But, this was also a Friday as well. And I know in my data, Fridays are not the best, so I tend to only try and take the cleanest setups as possible. Was this a super clean setup? No, this is probably a B+ setup, maybe an A- setup. It wasn't the best, cleanest possible trade. So, again, it broke even, so I'm not, not too upset. I'm not going to complain, but, looking forward, would I have taken this again in these exact same conditions? Probably not. Probably not, or unsure. And if you're unsure, probably means you shouldn't be taking the trade, So, yeah, that was the 5th trade for the week. Moving on to the last trade. Okay, so moving on to the last trade for the week. This is on silver. Now, this is where I can say that I don't think I should have really traded this, to be honest. It was a break-even trade, but just looking back at it, this market is very, very overextended. Going into next week, I'm expecting a big pullback on silver before it moves higher. I am still bullish on this market, but just given the amount of, momentum in price, the way that it's just exploded over this high, it is very good long term, but in the short term, kind of, should I have been longing this all the way up here? Not sure. Given that it was also a Friday as well, not really sure. And you can see that, there's been no candle low broken for 1, 2, 3, 4, 5, 6, 7, 8 hourly candles, and if you look back in price, that's pretty rare to happen. I think did it happen here? 1, 2, 3, 4, 5, 6, 7, 8. Yeah, look, the 8th candle got put in, and then the high of that candle got taken, and so it's very rare for these sorts of run-ups to happen, but it happened here. And is it worth trading? Probably not. You're probably just going to get caught up in a little bit of FOMO, but it was a momentous market, and so I did end up looking lower. So if we move to the 15-minute, again, quite heavily overextended. I would have wanted a pullback into the EMAs, but we did have this candle here. This low got taken, and then straight away price pushed higher. So I was thinking, it still looks pretty good to look lower. I would have, if this trade had happened around here, would have been much better, but it happened even higher up, which again, probably not the best. But looking at this trade here, the reason I didn't take this trade here, because this also is a fair trade to take. We can see here that price had actually tried to come higher, and it tried to come higher for a while. It wasn't just one candle that wicked, it was a few candles, and then it moved lower. But then we do get these moves higher here. Now, the reason I didn't enter in this candle is because I don't like this sort of zigzag movement where it's, come up here, we've created a low, created a high, created a low, and then we've come up high here. Oftentimes I'm thinking, okay, yeah, we could break this high, which it does, but a lot of the times it does end up coming lower. So I didn't take that trade, but looking at this trade right here, we did have a tiny fair value gap right there, which if we play price back, did end up getting inversed very nicely. So we've had push down into these EMAs. Again, they're all sloping upwards, which is really cool to see. We've had a nice displacement here through the inverse fair value gap. And then if we play price out, we do take the high. So I am break even at this point. And then price does take me out. And the funny thing is, I didn't think silver could go much higher, but boom, it does. And it's just unfortunately one of those markets where, yeah, these moves do happen, but I think overall silver is quite overextended right now. Like I said, looking higher time frame wise, if we play price out to where we left off for the end of the week, you guys can let me know, but this low here is almost 100% going to get taken. I'm not going to say 100%, but it most likely will get taken because we've had this massive run up. We need to come down, mess around for a bit, reaccumulate, go sideways just for a little bit before we move higher. So yeah, overall, very positive week. Like I said, plus 3R on the week, which is really awesome. Very happy with that. It's a little bit of over trading, I think. On the Friday, like I said, I did journal to myself that I was feeling a little bit irritable on that day for whatever reason, and these things can really affect the way you perform on the charts. So it's very important to become aware of them. I think I could have mitigated these break-evens I had and just not traded that day, and I wouldn't have missed out on anything. So it's quite nice to be aware of that sort of stuff and to really just be honest with yourself and to sort of learn your own mind and understand how you function as a person, because it will help you in this game of trading. So yeah, hope you guys enjoyed. Hope you guys learned something. If you do have any questions, drop them down in the comments below. And yeah, I'll catch you guys next week.